Hi, good morning, everyone. Welcome to another episode of the Crypto Hour. Today, Friday, the 17th of April. So let's go straight away into having a look at the kind of some economic news. Obviously, at the moment, the political news in a way move prices a lot. The economic news, but let's go and have a look at the calendar anyway to see what were the recent events, and then we'll take it from there. Okay. So in let me just refresh the screen. Okay, so looking at this week, and when it wasn't a particularly heavy week in terms of announcements, as you can see. We had a PPI producer price inflation figures announced on Tuesday, which are actually quite low at the moment, like a month-on-month, like only at 0.1% against a forecast of 0.4 for the core, and 0.5 against 1.1 for the overall index. So inflation is not quite biting quite as hard as expected, at least from the producer price. Nothing much in terms of numbers, great numbers for the rest of the week. We got some employment figures for Australian dollars, GDP in the UK going a little bit better than expected, but nothing much of great relevance that we should be worrying about. For next week, we have, instead of retail sales, CPI for the UK, and then manufacturing figures for the euro and the pound again, and the US. But again, so a couple of weeks are not really very heavy news items from the economic calendar. Now, the political calendar is slightly different. It's slightly different because as you know, at the moment everything is being dominated by the Middle East. Where there is the war between Israel and Iran and the US, or Lebanon and Israel, it's affecting the markets. Although as we have seen, the market have reacted positively to the possibility of a kind of easing of the American attack, and the possibility of some sort of accord coming through, and the markets have reacted, like pushing up quite strongly and picking up all the lost ground. So if we go and have a look at I can say recent moves, we can see that the S&P 500 and the Nasdaq have made new highs. So this is the S&P 500. You can say just yesterday closed at a new all-time high, so over $7,000. So it will be interesting. We're discussing in the previous hours. It will be interesting to see what happens today. If there is enough momentum in this move for the weekly chart to close above the previous all-time high or not. That's generally quite significant. So if we look at this is the weekly chart. As you can see, 3 very positive weeks. Although on the current week, we can see that the momentum is as soon as it got close to the previous all-time high, then the momentum is becoming slower. Can you see here? Big move on Monday, a little bit less on Tuesday, a little bit less on Wednesday, a little bit less on Thursday. What's going to happen today? At the moment, we are sitting pretty much at almost like yesterday's high, 7,050. But as you can see, there hasn't been a lot of move in the price so far today. Although, as you understand, this is an American market, so most of the move will happen during American hours in about 5 hours from now. Okay. So this is for the kind of like S&P 500 in terms of crypto. How was crypto reacted to this? So this is really from the end of March. The end of March, we see the stock market S&P 500 has done we go from the open, okay? Oh no, let's go from the bottom. So from bottom to top, it's done 11.7%. Okay, we will say it's a pretty positive month overall. Let me just remove a few drawings here. And we look at the same thing for Bitcoin. So again, what's happening during this month? And we can see the Bitcoin for once has actually outperformed the share market about 15%, compared to 11% in the S&P 500. So now what's happening? What is worth of note on Bitcoin? Okay, so you see that this is the big drop that took Bitcoin to about $60,000. Okay, since then there's been like a tentative recovery. But the important thing to note is if we go back, can you see where the like a strong resistance has been in the past? Okay, so that was the previous all-time high of March 2024. There was like it took a while, until November until we broke that. And then when price revisited, there was a strong bounce as well from April 2025 that took us to a new all-time high. And then when price dropped below, as you can see, this phrase that you might have heard 100 times, in trading, any market or any technical analysis, talk about resistance and support. So you can see here, there was like, we had resistance here. Let me change the color. This one. This one is support. And then here we are going through actually this whole area. Again, has been resistance. So really what we want to see, first of all, a new relative high, since February being established. So that is sitting at the moment at about 76,000, and the current price is 75,000. But it's not only a new high, but a significant weekly closure, well below the resistance point at about sitting at about 74,000. Okay, so we go to weekly charts. You can see that previously, you see here how on the weekly chart you can see much better the resistance, because when you see this fine lines, this is called the wicks. Okay, like a wick of a candle. It's showing that market did play around, did test that level, but didn't have enough strength, didn't have enough momentum to maintain that price level. So there wasn't any trust in the market that Bitcoin could actually move higher. Now, again, similar thing to the S&P 500 now, it would be interesting to see what happens today. Because if we close the week above this point, so at 75 or above, it would be a signal of confidence of the market in Bitcoin. Because remember that although this, Bitcoin, we are looking at Binance numbers here. So Binance can trade 7 days a week, but for most institutional investing, Friday is the end of the week. So this is the end of the tradition, is the end of the trading week. So yeah, Bitcoin can still be traded on Binance and the other exchanges, but you cannot trade IBIT, for example, the Bitcoin ETF over the weekend, and so on. So this level is significant. So keep an eye on it and see, go back to it by the end of the day. So in about, what time is it now? 9 o'clock. So in about 13 hours, and see, what happens to this candle. Does it close above where it is? Even better if it closes, let's say above this point, somewhere along, above the previous high, it will be even better, and even like the third confirmation. So what we would love to see would be a closure above this point here, which is 79,000. I mean, looking at the recent moves, that's probably unlikely to happen by today. But again, if we're looking at the trend, this is where the trend will be terminated, the downtrend will be terminated. Because I'll show you maybe in a daily chart. So this is the current trend where we're sitting, okay? And this was the last move. Okay, this was the last down move. So this point here, that I've highlighted here, this is what is called a controlling swing high. Okay, and is what determines whether we are in a downtrend, we are in an uptrend. At the moment, the dominant trend is still the downtrend until we break this point. And add at the very least a daily, better even a weekly candle close above this point. Okay, but before we get to that point, first of all, we have to convincingly break the 74,000 barrier with a weekly closure beyond that point. That might or might not happen today. Okay, so for both the Bitcoins, it's a similar picture. Closure above this point gives almost like a green signal for the next up move. Okay, closure below, it's uncertainty, danger. We're not sure. We'd rather take our profits because we're not confident that prices are going to carry on going up. Okay, so this is what the weekly closure can mean when we look at these things. Okay, they're not just squiggly lines and like red or green candles. It's all these are like representations of market sentiment. Okay, this is how you should look at this. It's just a graphic way of representing market sentiment, and there are emotions behind that. It's everybody like me and you making decisions. Okay, do I want to hold on to my Bitcoin or do I want to sell them to make a small profit? Those are the decisions. The moment that the majority, the mass mind decides that actually, you know what, Bitcoin is really cheap at this price, I'll hold it because the next move up is going to be to the moon. This is the moment that when prices then start moving quite quickly. When we look at recent moves here, and we have a look at the crypto ETFs. Okay, so we can see that the ETFs have been. We can see here on the right hand side, there's been like a mixed bag recently. But over the last week, we can see that the green candles outnumbers the red ones. Okay, so it means that there's money now, institutional money flowing back into crypto. Okay, and you can see here last week there was like about $500 million of incoming deposits. Last month about 700 billion. But last quarter we had like 1.8 trillion coming out of the crypto market. So it's still quite a way to recover until we are in what is called like a bull market again. So looking very quickly at the Bitcoin ETF, so you can see, we are having a positive week, so we had three positive days. Especially look at the largest ETF, which is the IBIT. The IBIT now is at 1, 2, 3, 4, 5, 6, 7 days in a row of deposits, okay, or green numbers. So, and overall, we can see this week is at 400, 600, about 300 million of positive inflows into Bitcoin ETF. So let's go and have a look now at the Ethereum and the other coins that are being tracked here, like Solana and XRP. Again, Solana been 4 days even better of positive inflows. So 50, 110, 130, 140 million, which is quite a lot for Solana in one single week. Sorry, for Ethereum. Obviously the numbers are smaller than Bitcoin, but it's to be expected. Solana, again, 3 days of positive inflows. XRP, even better, 5 days of positive inflows. So you can see it's not just Bitcoin. It is more. Even some of the altcoins are started turning around. So and we can even. Oh, wait a sec. Don't do that to me. We can even see on the realized price chart, which I'll show you in a second. And just I was kicked out unceremoniously. Okay, so as you can see here, where is the realized price level, which is the last recorded move in every single Bitcoin in circulation. So that includes the coins that haven't moved for 10 years and the coins that have moved yesterday. Okay, so as you can see, this level, as the price came down from from 100,000 and above, it used to be about 56,000, and it dropped to about 54, and now just as you can see from the 1st of April, no, 2nd of whatever, 4th of April, it started slowly climbing back up. So we're still in the 54s, and it's about 54 too. Okay, and I see this number pretty much as a proxy for the I would say the bear market bottom in a way, because always within a range of that price is where we have met previous bottoms in the market. So really, if you count between 10 and 20% from that range, that will take us, 20% will take us down to the mid 40s, which is, by the way, again, another significant thing is when the ETFs were launched. Okay, the ETFs were launched in the mid 40s. So if we get to 54, it means that it's the point at which Bitcoin holders at a break even as an average. Below 54, the average Bitcoin transaction would have been made at a loss. Okay, and above 54, we are at a profit. So at the moment, we are more than 20,000 above that point. Remains to be seen if the 60,000 level that we reached in February was the low for this cycle, or if it's just like a pause and then we're going to have another drop before we start growing again. So there are some good vibes at the moment. Some of the indicators have moved from from distribution to accumulation now, and we see the some of the big holders, what is called the whales, started coming out and started accumulating again. So obviously there is confidence that price is starting to turn around. We will see over the next few weeks. That's the other indicator that we look is the NUPO, net unrealized profit and loss. So, and again, this is sitting at a fairly low level right now. So either about a 27%, 0.27 level. Remember that tops in bull markets then are associated with values around 70 or above. Above 75 is what is called the greed phase, and that has been associated every single time we reach those levels with the market top. Okay, so we're very, very far away from that. And interesting thing that we are far away from that, but we are above the previous cycle high. If you remember, which was around 70,000. So even if we are considered to be now still in the Bitcoin bear market, we're still above the previous cycle high. So I would say we're not in a bad place overall. Now, interesting would be to see here the other couple of things that we monitor is, let me just go into the crypto. Couple of things to be monitored are the one, the Bitcoin dominance. You can see the Bitcoin dominance now is standing at about just short of 60%. But again, we are now, as you can see, we hit the Bitcoin dominance at 65%, the maximum of this cycle. And since then, we had a confirmed downtrend, just very, very shortly interrupted. And since September, we've now kind of like been almost in a holding pattern, okay, waiting for something to break. Something to break. So really, we are waiting to really break out of this range. Okay, whether on the up or on the down. Now, if you look at the past cycle, you see what happened in 2021. I mean, during that time, where Bitcoin went from 73% dominance, this is how much Bitcoin represents our total market cap. It went from 73% to about 40%. Now, during that time, Bitcoin didn't go down in price. It actually went up from around 15,000 to almost 70. But the altcoin went up a lot more than that. And so this is why the ratio between Bitcoin and everything else in crypto went actually down. So even if we were to go down from 59%, from 60 to about 40, 45, Bitcoin will still go up. It just means that other things that have so far underperformed will go up more than Bitcoin. And this is basically this metric, the others, which is basically the all the coins outside the top 10. All the tens of thousands of coins in circulation, once we exclude the top 10. Now, you see, Bitcoin is trading above the 2021 high. All coins are way below. They're more than 50%, below the 2021 high. And in this cycle, we haven't even reached the previous top. So for me, there's still lots of room to go in the altcoins, and it's interesting to see that this bottom here, the August 2024 bottom, has actually held again, because technically we're looking at this move here. Okay, first move, second move, okay, and third move. Okay, so this is the long-term trend at the moment since 2023. Okay, and we were very close to breaking that trend here, but actually you see how price is a memory. Okay, so from the point of view of overall market cap for this metric, this held and it now started turning back up. Okay, so, and if we look at, so it's still quite quite weak, but we look at 29% increase from the beginning of February low, where Bitcoin, what did Bitcoin do during the same time? Sorry, I'm just going to find Bitcoin. So Bitcoin during the same time did 27%, and the altcoins did 29%. So pretty much like in step, but they are started turning around slightly. Okay, and we are in a place where there's still the same picture. So this is the total market cap. As you can see, we're still struggling to recover the previous highs of around over 4 trillion. The market went from 4.2 trillion to just over 2, so pretty much halved in this over the 6 months from October to the end of February, and now we started to recover. Okay, in terms of news, we're talking about ETFs and looking at ETFs. This is the very recent news from a few days ago, really. So as you can see now, we've had a few ETFs for Bitcoin, for Ethereum, for Solana. We now have a Cardano ETF that was launched on the 1st of April. Okay, so we are now it's obviously closely linked to Cardano's price, and now pretty much he's at just above the price where he launched. So he launched at $20.34. It's now at $20.47. So pretty much at the same price that it was at the beginning of April. But it's interesting because now there is also Cardano is one of the coins that are available again for institutional buying, or for pensions, or for anybody else that wants to purchase crypto through their investment platform. Now Cardano is available as well. So we'll keep having a look at that. We'll keep having a look at that over the next few weeks and months to see how it compares to the other ETFs. I imagine that at the moment the volume is still very, very low. We might want to include that. As you can see, it's very, very low volume at the moment. So we are talking about where are we? Yeah, the volume figures. Okay, we don't see too many volume figures. We're kind of like very, very, very low, apart from a couple of days in this. As you can see, that the volume is still very minimal. So will need to be seen in the future. Okay, but it's good news anyway. Let's go and have another and look at a few more news. Please interrupt me if you want to ask something. So this is again, where unfortunately the news of hacks and attacks, it doesn't seem to be slowing down. And so this particular attack, which was like recently on April the 1st, included quite a few different exchanges, including probably one that's probably the more well known is Bybit. Okay, and Ria Finance exploited, and many things have been subject to attacks. So what we're saying, not your coins, not your crypto. Always make sure that your coins are as protected as they can be. So either hold them in your own wallet, or make sure that the exchange where you have them is pretty secure, and they got pretty strong guarantees in case something like this was to happen. Now, question about AI is, there is AI is everywhere in the news and everything that people talk about. Now, there was an interesting post by Elon Musk that's basically saying what I've been discussing now for a couple of years, that probably the universal income, basic universal income, is probably going to be coming to a place near you in the next few years. Because as the AI affects productivity, now, people don't have money to live, then that leads to riots in the streets. So the only way that can be managed, if we are going to go that way where AI does a lot of the jobs that at the moment are being done by humans, then there must be some provision of this type where everybody can at least be given the minimum to live on. So basic universal income is something that may be coming in the next couple of years. And bear in mind that in some places this is already being tested. And the last thing actually I wanted to share with you is about the Clarity Act. We've been talking about a lot, as especially some of the big players are waiting for finding enough clarity, as the access before they get involved, because they don't want to make bets on anything, on like going back to the time of the video recorder. You remember VHS and Betamax? The Betamax was a lot better product, but in the end, he ended up losing to the standard that the users wanted more, which was the VHS. It could be the same thing here. So the Google, the Apple of this world will not get involved until they know that, they know exactly what the rules are, and they can build something knowing that they're not gonna have to look at it again within a few months. So on this side, there has been like a fight that you might have heard in news about stablecoin yield. So the fact that if crypto platforms should be allowed to pay rewards to users who just hold stable coins in their accounts. Okay, because banks argue that this will trigger a deposit flight, pulling money out of traditional accounts and into crypto farmers. Well, of course, of course, but why not? Why would you not do it? Why would you keep your money deposited at 0.5% per year, while you could get 5 or 6? So this argument has now being dismissed pretty much. The Council of Economic Advisors in the White House published a review finding no evidence that stablecoin rewards will cause deposit flight from bank. So, so there's still lobbying groups they are trying to stop, because obviously the banking industry is very strong. But we seem to have moved beyond that. So as long, there's still some posturing going on and decisions needed to be made. But once that comes through, as long as there's nothing, and it seems that this administration it's a lot friendlier towards crypto. So if that happens, it's confirmed in the Clarity Act, that is the final signal that we needed to say that cryptocurrency now are part of our everyday environment, and they're here to stay. So, things keep changing very, very quickly. But steps are being taken every day. Oh, yes, and another thing that I didn't cover, it's Charles Schwab. Let me see if I can bring the news. Okay, here, Charles Schwab, the largest brokerage firm in the United States. Let's bring it up. Announced the launch of its spot cryptocurrency trading service, Schwab Crypto, initially supporting direct trading of Bitcoin and Ethereum at the moment. But it's still, again, I'm not being funny, out of everybody that's got like an investment account, at least one person out of 3 has got a Charles Schwab account. So this is, again, it's a big deal, in a way to make it more of an everyday. So now Bitcoin, Ethereum, and then everything crypto, after that, is becoming more accepted by everybody. Everybody knows there's something that they can do, and it's accepted. It's not like a dark action that you do in covering your tracks everywhere, because it is a new asset class. They there to stay. So when even the biggest players start promoting this, it means that there is like a groundswell of interest towards these products, and then they have to move with the times. So let me stop sharing, and let's get some some contributions, some questions. Anybody would want to contribute? If you guys can also turn your cameras on, that would be great. That would be good. At least I'm not staring at the black screen. Okay, who wants to go? Eric, go ahead.
I heard that the stable coins might be backed by the American debts. I don't know how to call it. Have you heard of that?
Well, I mean, yeah, this is how stable coins work. So you deposit your dollars, they give you a digital dollar in exchange, and then they put your dollars in bonds, and they get a yield from that. So this is like almost like a magic machine, So they are getting a return out of other people's money. That's how they work. So basically, in a way, the stable coins, in the US dollar stable coins, that is, because now there are euro stable coins, there are yen stable coins as well. Soon to be a Chinese stable coin as well. But this is what they do represent. Really, they are invested in bonds. So yeah, that is just simply a digital version of it rather than being a paper format.
Thank you.
And by the way, wouldn't you prefer having, if you had like a $50 bill in your pocket to produce a little bit of interest rather than just having a piece of paper in your pocket? It's definitely it's a move to get the financial system to become a little bit more open to everybody, because now if this passes the Clarity Act, it means that anybody can hold stable coins in their wallet and get a return on their money. Compare that to bank accounts, and then you understand the attractiveness of that position. Kath, did you have think you had a question to ask? Or see?
I'm just loving all the information. Thank you very much.
Oh, okay. Sorry, I thought you wanted to ask a question. So that's fine. You're welcome. Okay. Anybody else?
Yeah, mate, I put a question in the chat, but you didn't pick up on it. When you went on the TradingView chart and you were reviewing the Bitcoin chart, it looked like in recent times when you showed the current trend line that it's formed a double bottom. So I asked the question, is that what you would refer to as a double bottom? It created that nice kind of W shape. And that's seen as a bit of a bullish trend, I believe.
Let's play to the weekly chart so I can have a little more clarity. Move the volume. Yeah, I mean it's exactly that. So this is the way that kind of like what David was referring to, the W. So this is what we are seeing. Now the W is not complete though, because this is really, if we remove, really we're looking at this, from this point here, you can see the W forming, but to be completed it needs to move higher. Okay, so traditionally what would happen from here? If the W, which is what is called a reversal formation, so it's W when it's at the bottom, it's an M when it's at the top. Now, what the trading books will tell you is that you wait for a breakout from this. So for having this leg close higher than the previous high, which at the moment is about 76, and then you don't go for just because it breaks you start buying. Generally, you wait for retracement to buy back. So the action will be something like this. Now the idea is then to find where is the ideal point where to re-engage, and that depends because we don't know what the action is yet, what is going to happen, but we can go and maybe have an assumption, on the assumption that the current move would move higher than this, then we were looking for like a re-entry below this line. So we're assuming the price moving maybe to 78, 79. Then when would be, so what would be a good point? And normally is the move that caused the testing of this first. So where does this move come from? Somewhere in here. Even the daily chart is not clear enough. Now the 4-hour chart is a lot clearer. Okay, so ideally, from just that, I'm not saying this is going to happen, but literally this will be the interesting point for me, where I would be happy to put money behind this. If it were to close beyond there and then come down to about 71.5, then I'll be very happy to buy down there, because that's basically you need strength to change the market, to break through. Okay, and so this is telling me, so it hasn't happened yet, but we'll see if there is enough energy in there. It means that this is the move that asks the question. Okay, and also if we're looking at this, so that move has already been 1, 2, 3, 4, almost like 5 times the risk that you would be taking. When I say the risk, is because the risk is generally from where you enter to the stop loss that will be just below this point. Okay, so it's a very significant move that has tested something significant. Okay, has continued the previous pattern that started in the end of March. So again, the pattern is formed by consecutive higher highs and higher lows. Okay, so we got a low here, got a high, higher low, higher high, higher low, higher high, higher low, higher high, higher low again, higher high. Okay, so that move has continued in that fashion. Okay, so has continued this move. Okay, and if it breaks this is what I'm saying, if, because I wouldn't do this yet. I wouldn't be as confident, let's put it that way, until this was broken. That would give me a further confidence. You could still enter here if you wanted to, if you had a retracement now, because we had anyway a continuation of the pattern so far. But to give me a little bit more confidence, I would like to see at least a daily close beyond 76,000, because at the moment we tested it, but the market has pushed back. It touched 76, gone back to 73, and then we're growing again. But I want to see some conviction behind that move. Okay, so that would be,
yeah, and that area that you've colored in is also acting as support now for the 25th, where your cursor just was. Is that a good way to look at it? If you go over to the 25th of March or Feb?
Sorry, 25th of Feb.
No, yeah, there. That looks, so that dip, the dip is now being support for what there was resistance.
No, not really.
Not really?
Not really, because this move here is not really significant. It didn't do anything. So this drop here didn't really do anything. It didn't close beyond the previous point. So it's not really that significant to me.
Okay.
It's just a you know, at the moment, if we break through, it will be like a corrective phase here. But it's already, you see, that point had already been broken on the way up, so it's not really, it doesn't really, at that point. So if you, the way to look at it, if we were at this point here, what does that mean to you? Why did the market stop there? There is really, the only thing we're saying is that the only point that you could go and find out is that it was this one. You know, but this was the initial bounce when it dropped from 60,000, but that's the only you know, plausible reason why the market might have paused there and gone back down. But it's already, so it's not that really that, you know, we're really trying to split hairs because that point had already been broken once and twice by then. So for me, it's not really that significant. You know, I will look at for me, what I'm concentrating on first of all is the current trend. Okay, and obviously we got here the current trend that started on the 29th of March, which is again consecutive higher highs and higher lows. And the second thing that I want to ask you when I confirm if a move is significant or not is does it make any damage? Does it break anything? Okay, so here at the moment we've broken this point, but we notice that this is not that significant because wasn't really a downtrend. So this would be the first point where I'm thinking about, well, this move actually broke this and made a new high. That would be significant. And then, only then, because then I've got some confidence in the up move, I will go and look for a place where to re-engage. Okay, but only at that point, not before. Okay, interesting. We're having some interesting conversations. Pierre, for the last couple of years, happenings in the world and investor sentiment seems to affect the price of Bitcoin. Same as the price of other commodity shares. I think this will stay the same for the next 5 or 10 years. Okay, so there's a lot of things to be considered. In the last couple of years, there's been an interesting development, which has been gold, the gold price jump. Okay, now when you think about it in that way, the investors that hold gold in their portfolio are the same investors who hold Bitcoin. So with the idea that gold was up in that much and that was going up that much, and so they are the increase in value of the gold portfolio meant that to reduce the risk and volatility, you had to sell some Bitcoin, because between the two they preferred having gold than having Bitcoin, so to speak. Okay, because it was a lot stronger momentum. Now that is calmed down, the increase in gold, we might see some rebalancing on the account. So again, with some move from gold back to Bitcoin, and we can see that often too with if we look at the price of gold in Bitcoin, sorry, the Bitcoin in gold. Okay, so we see here what happened. When you think talking about the last couple of years, okay, so from this is started actually in at the end of 2024, so it's been about a year and a half now. So we can see where Bitcoin had reached an historic high level compared to gold. So it created a new high, higher than in 2021. So Bitcoin in 2021 come to be worth 37 ounces of gold. And then it went over 40 for the first time in December of 2024. That's when the gold started going up a lot compared to Bitcoin, and we can see the value has pretty much like Bitcoin lost more than 50% of its value in terms of gold. It went from 40 to 12. So 3/4 of its value. Now you can see how that relationship now has started to change. So from the end of February, now gold has gone back up as after dropping from creating an all-time high, but Bitcoin has gone up more than gold. So we've gone from 12 back to 15. So there's been like a 20% basically increase in the price of gold against, in the price of Bitcoin against gold. This is the way to do it. So there is plenty of rebalances. So where are we going down to? You see, we've almost gone down to the previous bear market, where Bitcoin was worth around between 12 and 9 ounces of gold, which is again. So this is interesting, isn't it? Actually, we can take a little bit more down to include the previous low. So that was the 2 cycles ago, the high of 2 cycles ago, the bottom of the previous cycle. So you can see how we move up to an order, to another dimension, really. And this is, again, this is not the price of Bitcoin in dollars. This is the price of Bitcoin in gold. So inflation has got nothing to do with this. It doesn't really come into it. So look at this. So what happened last time? We went into the previous high. Now we went back to those levels, so the levels of 2017, really, in terms of gold. But interesting to see that if you bought either Bitcoin or gold in 2017, you pretty much have had the same so far. How we are at the moment, even after the 75% drop in Bitcoin, have kept their value. So Bitcoin in terms of gold has kept its value, at its lowest point with gold. At its highest point, has done more than double what gold has done. Okay, so it's interesting to see that we can consider to be pretty much at the bottom of the bear market. And this could represent a, I'm not saying generational, but a multi-year opportunity to then get some of your gold redeveloped in Bitcoin, because there is a strategy that can be used both for precious metals, for gold and silver, for example, or for Bitcoin against either gold or silver. Of, let's say you have a portfolio and you have, let's say, both gold and Bitcoin in that portfolio. Okay, now at certain times you will sell all your Bitcoin and buy gold, and other times you will sell all your gold and buy Bitcoin. So if you do that, if you did that at some levels and have sold Bitcoin for gold here and use your gold to buy back Bitcoin here, and again sold your Bitcoin for gold, can you see how their results could have been amplified several times? And this is a simple strategy, and not only to do with Bitcoin, but even with the gold-silver ratio. Gold-silver ratio. Oh yeah, similar thing here. So you can see there is a certain relationship between the price of gold and the price of silver. At this point here in 2020, gold was very overpriced in terms of silver. So that would have been really good to sell your gold and buy silver. And the opposite then in a year later. Same here in April 2025. Sell gold and buy silver. Now is the opposite is true. Sell silver and buy gold. So the good thing about this sort of strategies is that they don't really take any account of the money, but they grow your bag. So if you start doing this thing, basically you grow your amounts of gold and silver, whatever the price may be, so that after a number of years you had more gold and silver than what you started with. The same with if you do this with gold and Bitcoin, you can use this so that at the end of a period you have more gold and Bitcoin than what you started with, whatever the relative price. Yeah, hopefully guys this can help you and can really grow your strategies then you can use for your portfolio, because cash is king, but assets are what's it called, emperors. So being able to make money from asset swaps, it's fantastic. Okay, so guys, it's 10 o'clock. So it's the end of this call. We'll be back next week, same place and the same time. Jonathan runs his Cardano-based session straight away after this, about 10-15 minutes time. So I would recommend that you go and follow that if you can, because it will teach you how things are done on a blockchain ecosystem, and it would be something that maybe not now, not today, but give it a few months, a year or two, and we'll all be doing this. We'll all be doing this. Anyway, Jonathan, I don't know if you read my message. I can't do a usual meetup of today.
Yeah, I saw that.
So
That suits me, actually.
we talk about what we need to talk about next week.
Perfect. Yeah, sounds good.
Fantastic.
Thanks, Luca.
So, no problem. You guys have a fantastic weekend, and I'll speak to you all next week.